Hey folks, welcome back to Just Ask George, the show where we explore the universe, the entire universe, the stratosphere of structured finance, corporate finance. David Wolf here with George Lovato, the head dude at BH Capital. You can find them at bhcapitalltd.com, a merchant bank, one you need to know about if you're forming capital for your business. Meanwhile, we call this segment on Just Ask George the Grab Bag, one of my favorites because I get to learn new stuff. We're going to start with WIP financing, work in process financing. What is WIP?
The idea behind financing WIP is there's a gap between the actual throughput of producing something or providing a service, the dates that you're incurring all your payroll, and then at an end of a given period, you're going to bill for that payroll if you're kind of running a body shop or a consulting service, or actual work in process on a manufacturing scale. And so usually work in progress is involved in a series of steps of advances related to an asset-based line of credit.
Okay.
So when you start talking about WIP, you're going to get a percentage of what you've done advanced off your line of credit. So that's part of the universe of asset-based financing.
George, when you do this and you set up this kind of a line, are there incremental steps? You talk about a work in process. That implies that there might be multiple places where a draw is taken. Is that how it works?
Exactly.
Right.
In manufacturing, you may take a draw for inventory, commodities. Then there's going to be work in process. Then there's going to be at the point when you actually bill it, invoice it, and ship it. Then you'll get another advance. And then, of course, when you're paid, obviously you go back to pay your principal, all your advances that you've made plus your interest, and then the difference between that gross amount is what that's your dough.
Yeah, after your cost of capital on all these levels. Does this include AR financing? In other words, does the work in process arc can include
sometimes the business just needs WIP.
Okay.
So it doesn't always involve the full spectrum.
And you might plug in other players or other facilities to handle those things.
Right.
Okay. Well, which brings us to another, I think, related subject, contract financing. What is it and how does that work?
You can look at it, there are a couple of different definitions. When you first think about contract financing, you think a lot about the contractor building something for somebody, and he needs to realize some advances for the purchase of whatever his building materials are and some of his labor. Okay, that's one contract financing example. Another might be that you're a government contractor. You're providing a service, a good or service to the government. And as we know, they don't pay very fast. I mean, they're out there in a lot of cases 90, 120, 150 days from the point you invoice. And so that contract financing feature may involve an initial advance on the execution of the contract so that you can prime the pump.
Okay.
And pay some of those costs as you go along. So those are the two ends of the spectrum, and then there's a lot all in between.
Okay, great. And then third on today's grab back, we have PO or purchase order financing. Color that
PO
for us.
I'm pissed off.
It's pissed off financing.
Interest rates high. I don't get enough money. It's a lot of whining and kvetching.
It's kvetching and whining, and I'll bet that comes into it. So purchaser, I'm what, a manufacturer, or I'm well, again, please take us through this.
Okay, let's say that you're a major credit corporation. You're a Fortune 1000, and I'm just the little guy I am, and you issue a purchase order to me for 6,000 of my widgets.
Fine.
I'm going to have initial difficulty because I'm not used to that kind of volume coming into my operation. So I have to go to a source that's going to say, oh, this is a Fortune 1000 company. They're going to be good for it. They're going to look at you and say, can you produce all these 6,000 widgets? Have you had history at producing, maybe not 6,000 all at once, but can you do that in a given period of time?
Yeah.
So they're going to dissect your capacity and what you can do. And then they're going to say, okay, well, we'll take the PO and you're going to give us an assignment of payment when you're complete. And we might build something in when you invoice. You can get another advance maybe. But here's the dough. Go to work. They're off to the races. So PO is akin to contract financing, but it is specific usually to a product or something that's manufactured.
More product specific and manufactured. 3 kinds of asset-based lending facilities.
Yeah, all different phases of asset-based financing.
This is a huge part of the world you live in terms of the merchant banking, what companies need, right?
Right. When someone asks me, what do you do? I say, well, I'm a merchant banker and corporate finance consultant.
Right.
Emphasis on consultant because you have to teach people
Yes.
first about what they need. As opposed to what they think they need. Because a lot of times, we hear this, you hear
Absolutely.
it, I hear it. All I need is a line of credit.
Right. It's just, let's plop some, the capacity to borrow on my balance sheet and that'll solve
just
my
give
problem.
me a term loan.
Right.
When you really need to teach them that there are as many hairs.
I think this is one of
my head.
and I've been working with George about a year. This is about hairs on your head, of course, folks. No, but seriously, I think this is one of the major things that I took away from our very first when I met you was that there's a real there are different forms of financing, and a lot of business owners just think about if I only had $1.5 million, if I only had to, and they come to us and we have to say no. This is specific to this function in your business. This is specific here. They all have different layers and nuances that you have to understand, and they have to be applied with discipline, right?
Applied with discipline and the right tool for the right job.
I know we're running out of time. George, as always, you, Brock, you are the man.
Another good segment.
Another good segment. For more about ABL, asset-based lending, for your small business, visit BH Capital Limited, or BH Capital LTD, the initials for limited, bhcapitalltd.com. I made it through that one. And of course, this segment brought to you some caffeine. And of course, tell us about the Obstacle Course series. This is going to be available.
Well, we're coming out with Obstacle Course Book 2, mid-year next year. Actually around April. But in the interim, we're releasing Stupid Without a License, which is going to be a free ebook with inserted interviews just like this on each one of the 10 stories that we're doing. And they're designed to teach the beginning entrepreneur and the mid-level business owner, the mid-sized business owner, what not to do, and in some cases just entertain them.
And I think one of the things you like to do most, in addition to providing capital for businesses, is teach. And maybe there's a little entertainment there too.
There's a little entertainment there too.
For more entertainment, join us next time on Just Ask George. Thanks again for joining us.
Bye-bye.